Hi there, Mark here from Success with Options. We're back to review a vertical spread trade that we put on just over a week ago. What I wanted to do at this point was go back and take a look at how the trades progressed, some of the options we had as the trade progressed, and also look at some of the potential options we have in the future in terms of how we might continue to monitor the trade or potentially take some exits on the trade. Okay, here we are on the platform. And as we take a look at the position, we have a couple of different things that I want to draw your attention to. First of all, if we take a look at the position in terms of its profit and loss since the open, we see that we've already made $50 on the trade. And in fact, today, as EWZ has moved both down and then back up again, we're actually up $20 on the day. One of the things that we can take a look at here is that we continue to have a positive delta position, which means that we would continue to like to see EWZ move up. And so that positive value in the delta would tell us that that's our desire for that position, that we would like EWZ to move up. The other thing I'd like to draw your attention to is that our theta is positive, so we're continuing to generate just by time passing $2.55 worth of decay, or we're basically profiting $2.55 per day on this trade. We can also look up here at our in our working orders, and we see that we still have our two orders in place. We have one order to close at 10 cents, and we have another order to close at $1, which are basically our target profit level, capturing 80% of the initial credit of 50 cents, and a maximum loss that we're willing to tolerate on the position. And then over in the mark column, we see that we have the current price to close is 25 cents. Now, I'm going to go ahead and draw your attention to the chart that we're looking at here. And what we see here is that I've actually drawn on the chart some different lines that can help me kind of get a picture of what's going on from a technical analysis perspective. So the first thing that I have is I've put in place a channel, and I drew this about 3 or 4 days ago as I was evaluating the position. Actually, I think I drew it about the time that we were experiencing this this first initial high. I was looking to determine what some of the support levels as well as resistance levels might be. So I went ahead and drew that in using this level as the previous high and capturing some of these highs, and then just put a channel in. And you can see that pretty much it followed that pattern where it moved up, hit the top of the channel, and has pulled back dramatically. Now the other thing that I wanted to draw your attention to is, let's go ahead and zoom in here. We actually have a couple of things going on. Some technical analysis experts would suggest that there are different levels of support. So we have like a primary level of support that's established by this bottom level here. And then as we see the acceleration of EWZ moving up, we see that it started to move into a slightly higher trajectory. And so I've drawn in this purple line. We have a slightly higher trajectory that we move up. And actually, up until a couple of days ago, or yesterday I guess it is, we actually were starting to get into what might be considered a tertiary acceleration or support level, where there would be, imagine a line that just almost goes straight up. Obviously, that can't be sustained forever, so I didn't draw it in. But I think it's interesting to see that as we pulled back, we fell back and landed on that secondary support level. Now, that's not a guarantee that we'll continue to stay above that level. We may actually see a pullback back down to this support level here. But at this point, that support level is already above the $50 short strike that we sold, and in fact, our moving average, which I've also put on the chart. It's a little bit hard to see because it's being overlapped by the channel support and resistance levels I put in, but we kind of see this level here where that's already moved above 50. So a couple of things I wanted to comment about this in terms of trade analysis. I actually was reviewing the trade position when we were in this level right here on these 2 days. And the reason I did that is because when I looked at the position in terms of the cost to close, we were actually at one point within 5 cents of being able to close. So I could have closed this position for 15 cents. Should I have closed that position? Well, in ordinary circumstances, I probably would have closed that position just because of the number of unknowns and the fact that we'd already captured the vast majority of that 80%. We probably were capturing I would say probably at least 75% of the initial credit at that point. And so it may have been a logical thing a decision to do that. We would have locked in that profit in less than a week's time, by the way. So that's kind of an interesting thing. We actually saw the benefit of not just the passage of time, but the movement of the stock in our desired direction, which those two things working together really helped boost the value of this position. Now, what happened yesterday, and it kind of made me regret not getting out of the position. We saw a pretty significant pullback. I think it was something on the order of $3 and some cents as a pullback with this big red candle. The only thing that really encouraged me in the fact that we're still in this position is the fact that it found support at that secondary support level. I decided to stay in this trade simply because of the fact that in this tutorial we wanted to showcase the use of our two exits that we'd established. And again, under ordinary trading circumstances, I very likely would have made a decision to pull out of that position a couple of days ago when we could have done so for around 15 cents. And I think given the current climate, one of the things we could do is after determining to get out here, if we saw a pullback like this, which we did, we could actually make a re-entry right here at this support level. So there's nothing saying that once you decide to get out of the position that it doesn't look attractive again, and we might decide to re-enter the position at a different strike level. We might choose to sell a slightly higher up position. We might choose to sell out into another month, into July instead of June, and so forth. So in this case, I think we just want to continue to ride this trade out. We still have just over 2 weeks of time left in this position, and we're going to see as we get into the last 2 weeks that time value, if nothing else happens, will continue to erode at a even more rapid rate. So that's it for now. I think we just want to continue to monitor this position and stay in it. It's still maintaining a bullish trend, and therefore there's probably no good reason to exit this trade. I hope you found this video helpful. Successful options trading is not just a matter of knowing how to construct a trade or how to enter or exit the trade. Successful options trading is built around a trading system that includes a trading plan with rules for selecting the stock or ETF, rules for selecting the options, rules for entry and exit, and rules for money management. These elements help produce consistency, and that is the #1 attribute of a successful options trader. For more information on options strategies, building an options trading system, or options broker reviews, and more, please visit www.successwithoptions.com. Thank you and happy trading.